Hello and welcome everyone to this month's Real Action topic. I'm Sophie Musamechi. If we haven't met, hello and welcome to the community. It's so great to have you here, and I will be catching up with you personally really soon because I'm looking forward to getting around to all of the meetings again, which is cool. So this month's topic is a really, really important one. And it's something that but no more. And I'm really excited to introduce you to our guest trainer for the month, who is also a community leader in Manly. So the title of this month's session is How to Manage Your Cash Flow So You Can Grow and Avoid the Cash Flow Crisis. So I'm going to introduce you to Geraldine Dobson. Of those of you who don't know, Geraldine is the community leader in Manly with Bianca. Geraldine's the owner and director of Hemisphere Accounting, a boutique accounting firm in Sydney, and she also services clients all across Australia and the world. So Geraldine's a qualified chartered and has over 20 years, telling your age now, Geraldine, experience dealing with all sizes and types of businesses, individual finances as well. And she's qualified and experienced in Xero, QuickBooks, Receipt Bank, and other packages. Wow. And operates on cloud-based firm, which ensures that she makes it super easy for her clients to work with her no matter where they're based, which is just awesome. I can still remember doing my first business accounting on a spreadsheet, and it used to take me like a couple of days every quarter to get that done. So I'm really excited to introduce you to Geraldine. She's super passionate about helping small business owners really understand their numbers, which for many of you is not your forte. So this month, this is the time for you to step up and go, all right, no more avoiding this. Let's get it done. And she's got an amazing, amazing topic to share with you. So I am going to hand over to Geraldine, who's going to help us to understand our accounting so it seems more easy. So just like hairdressers, ladies, just like hairdressers, accountants and bookkeepers are not all the same. And I have had some very, very not so great ones and some amazing ones. So we're very fortunate to have a few accountants and bookkeepers in our community. So Geraldine, over to you.
Thank you, Sophie. I'm very excited about this topic because I am really passionate about helping small businesses. And the biggest thing that I come across, people just don't understand what their numbers are. They don't know what they mean. They're not up to date. They just don't have any concept of. If you ask them what's their turnover, they don't know. Hopefully they know what the word turnover means, but there's lots of jargon, there's lots of terms that they don't understand. So this month I really just wanted to look a little bit at managing cash flow and also at just explaining what some of the reports are that you get out of all the fantastic software we have these days. It's really easy to manage your accounting these days. And the thing is, you can actually do it yourself, which is, I think, really makes it easy and much cheaper as well. But you can't do that unless you don't understand what you're doing. Because I do find, though, those clients that try and do it themselves and then they're not sure exactly what's going on, I do spend more time undoing what they've done than doing it in the first place. So I will always say to people, just be careful, know what you're doing before you do it, because it is really easy. Things like Xero, QuickBooks, they make it seem super easy. It's just when you come down and look at the numbers afterwards that you're not sure.
And can I just say, and it's normal for an entrepreneur not to understand the numbers of the business, because you get started out in your business because you're great at your skill or your service or you've got a great product, and then we have to put on all these different hats of all the different business, all the different parts of the business. And so whether you're at a point where you can outsource it or you're still doing it yourself, it's really important to learn what we're going through today. So
yeah, you have to educate yourself. You have to, I mean, as a business owner, actually your finances are probably the most critical thing you need to really understand, regardless of what your genius zone is, and what your business is about. If you don't understand the finances, it actually will be the downfall of you. So it's really critical that you understand what you're doing. And obviously everyone does have their genius zone, but understanding your finances, even if you don't like them, is critical. Like if you don't understand your finances, you don't know what's going on, it could be the downfall of you. And so it's critical that even if you don't want to like them and want to know what's going on, you have to. There's actually no option but to know what's going on in your finances. So
awesome. Let's get started.
So I've got a little, I'll jump into my okay. So manage your cash flow so that you can grow. So it's important that you actually can't grow if you don't manage your cash flow. Cash flow is critical to you growing. The only way that you can actually finance that growth is by having a handle on what your cash flow is. So things like if you want to employ people, where often you may have to pay them before you actually get the money in. You maybe want to buy a premises, you need to expand, you need to pay for storehouses, you need to pay for inventory. It's critical. And there's quite a frightening stat, or quite frightening stats as to why small businesses don't survive. And more than 60% of businesses in Australia alone close within their first 3 years. So it's pretty epidemic that there's just such a massive failure of small businesses. And out of all those businesses that do fail, 82% of them are directly related to cash flow issues. So it's the number one thing that's killing businesses in Australia and probably around the world as well. I'm pretty sure it's not unique to Australia at all. So how they get to that cash flow problem is a whole lot of ways that it can happen. But probably the biggest two issues are not managing your expenses and not managing your debt recovery is probably the two main ones. But it's definitely one of the biggest ways of going out of business is not managing what that cash flow is. So what are the solutions? So I mean, I'm going to go through a couple of different little solutions, and for me, the main and the most critical solution to it all is really knowing your numbers, because you need to know that you're in a crisis if you are in a crisis. If you don't even track any of your numbers at all, you won't even know if you haven't made money. You won't even know if you've made a loss. You probably look at what's in your bank account, but that can mean absolutely nothing. You could have money in your bank account, but you could have so many people that you owe money to that actually your cash flow is negative. So just going through some 5 quick rules for managing your cash flow. So because invoicing is the start to maintain a healthy cash flow, but you need more than just revenue. You need to be able to collect that revenue. So putting money, invoicing money out, yes, you're generating a turnover, but that doesn't mean that you've got cash in the bank at all, because that money might all be sitting in your debtors and you don't have it in your bank account. And so that is the most critical thing. So you need to collect that revenue, and you need to get your invoices paid faster. So the first thing is you really need to keep your books accurate and up to date. And there's lots of software out there to help you with this. Even things like Receipt Bank, where you can just snap away at receipts as you go. So you're never losing those receipts. You're not having to give your accountant a big shoebox these days. Receipt Bank is the new shoebox. It's another thing we can add to that desk of when you look at that picture of what your phone does for you these days. That's another thing that can be added to the desk, a shoebox receipt.
Oh, I love that.
Yeah, because when you say that desk with all the video camera and the tape recorder and the video and everything, that's another thing that can be added now. Receipt Bank is your new shoebox. So keeping your books up to date is critical. Your cash flow is really only as good as your accounting and reporting is telling you. So don't let it get out of hand. Try not to leave it till the end of the year. If you're GST registered, you probably do it at least quarterly. Ideally, monthly is ideal, so you actually know what's going on. You really want to keep it up to date regularly, so you can see the financial state of your business at a glance. So you can download those reports, look at them, and see where things are going wrong or where things are going right. The second one is don't be too lenient on your customers. It's really hard as a small business because you are desperately trying to make those sales the whole time. So you tend to be more lenient, I think, than big business. But actually, as a small business, you should be less lenient because you've actually got more of a cash flow issue. So you want to be direct, you want to be fair, but you don't want to be a pushover. And so a clever and polite invoicing strategy will really go a long way. I mean, with all the businesses, all the small kind of accounting packages nowadays, QuickBooks, Xero, they all integrate with things like Stripe, Square, all those. I found when I first started using Stripe, which actually wasn't that long ago, it made a massive difference to my business because people are so easy, it's so much easier for them just to click, pay their invoice. They don't have to worry about going into their bank and setting you up as a payee. And yes, it costs you a little bit to do that. But most people are okay with you adding that cost to their bill. A lot of companies do that these days. And even if you don't do that, to spend maybe even $10 to get like, you know, a $1,000 bill paid is absolutely worth it. And if customers don't play the game, don't be scared to take formal action. Get someone to write a letter for you. Take some formal action so you don't let those debtors get too old. So really keep a track of your debtors and make sure that the days aren't getting longer and longer and longer, because as they age, they get harder and harder to chase. People forget about them. If you haven't chased them, they're like, oh, well, I've obviously dealt with that. But if you're chasing them, it's really important. And it keeps people at the top of their mind that they owe you money. Again, the software these days has a lot of built-in functionality to automatically remind people. The flip side of that is that you need to keep it up to date, because if you haven't reconciled a receipt coming in from a client and you've got automatic reminders sent out, it'll send it out. The only way the system knows that it has been paid is that you've actually reconciled it as being paid. So if you don't keep your reconciliation up to date, that is a bit of it can actually make customers more annoyed than anything. So be careful of using that kind of functionality.
Can I just say one thing on that as well? And be talking about this in the Wealthy Woman Mastermind is, you know, what type of client are you? So you attract the type of client that you are. So are you someone that always pays your bills on time? Are you someone that, you know, and then you'll start to attract clients like that as well. So, I mean, I hate owing money. It's the first thing I pay. I want to get it done, you know, straight away. One, because I don't want to have to think about it again, because that wastes my time. But also I don't want to have to owe them any money. So if you can do that within your business and that's how you treat your customers, then you'll also attract that back, that reciprocation back.
Absolutely. Well. Yeah, absolutely. And I think most people want to pay you. Like they're not there to try and take you for a ride. Some people just forget and they rubbish at admin, and they're not using something like Receipt Bank, so they don't even know that they owe you. So, but if you kind of have got systems in place to remind them, then you won't fall by the wayside. So yes, I mean, definitely stay on top of them. Don't let them get old, those receivables. Keep your accounting system simple and know your numbers. So this is something I'm absolutely passionate about. People are scared of their numbers. They really are. But if you know what your numbers mean, you don't need to be scared of them. So use some quality accounting software if you can afford it. And it's absolutely an investment worth making, is to use some proper software. It makes your life easy. And then you'll always know what your cash position is. You'll know who you owe money to. You'll know who owes you money. And it'll help you to forecast really just forecast for cash flow, so you can plan for things. For example, you need to, maybe you want to book you've got a big order that's coming in. You need to know that you've got cash flow to cover that order. You may need to employ staff. You may need to buy stock. You need to spend some capital getting ready for that order, buying some inventory. So it's really important that you you keep your accounting system and know your numbers, and just keep on top of where you are. And find yourself a good accountant who can help you with this. If you're scared of these numbers and you don't know what they mean, you need someone to help you. It's really important. Find someone that you work well with. Everyone works differently with different people. So find someone that you feel comfortable with, that, following on from Bianca, they speak your language, that you really kind of, you get on with them and you feel that you can really connect with them. So definitely keep it simple, know your numbers, get someone to help you. And also the other thing is with a simple accounting system, work with your accountant to decide on what your key business metrics are. So what are the things that are important in your business? So might be your accounts receivable aging. So how old are your debtors? So make sure that you don't let them get too old. That might be something that you want to keep track of. So a lot of accounting systems have dashboards as like something that when you log into your system, that's what you see. You see a dashboard, and you can put what you want on that dashboard most of the time. So you can look at what your aging is. You can look at what your inventory turnover is. Inventory turnover is how fast, how long are you keeping inventory in your books? And really, you want to get that inventory out the door. You want to sell it. You want to get it all. As long as it's sitting on your books, it's not doing anything for you. You need to understand, like, what are your margins? What's your markup? So those are the kind of things that an accounting system will help you do. If you have a good handle on these accounting metrics, you'll know what they mean to you, and then you'll be able to manage your cash really like a pro. You'll be able to take advantage of new opportunities when they come along, rather than trying to be at the beck and call of a bank, or if you're suddenly trying to raise finance, which you may not be able to do at the critical time when you need to. Now, something which is a pet hate of mine is keeping, something that people don't do a lot of, is keeping your business and your personal finances separate. It's really difficult in a small business as well, particularly for sole traders, because sole traders are notoriously bad at not keeping personal and business separate. Open a separate bank account. Do not put any personal items through your business bank account. If you need to pay stuff, transfer the money out of your business bank account into your personal bank account and make payments out of there. That way, you can really keep a clear idea of what your business, how your business is really performing. If you mix them up together, you just won't have any idea of how much cash your company is generating, and whether you're in a good position to pay yourself properly, or all that kind of stuff. You need to keep it separate so you can manage it better, and then rather put in place a proper payment strategy for yourself, whether you decide to pay yourself monthly, just what you need, and then if you know that, on a quarterly basis you review it, you say, okay, well, I can take more out, or really actually I need to take less out, and you can be realistic about it. The last point, number 5, build a cash reserve. This is really kind of the ultimate that you can do in terms of managing your cash. You want access to cash can really make or break your business. And so if you are able to just build up a little cash reserve for yourself, it's really that ultimate step in managing your cash flow like a professional. It gives you confidence, it gives you finances to grow that business, and for you to really take chances, which hopefully will result in a reward down the track. Sometimes you have to outlay some cash. You have to pay people before you get the money in. You have to have some subcontractors, or take some employees on, or maybe lay out some cash for a proper office. It's not possible to do this without either some sort of reserve, or at least maybe try and have a facility arranged. Do it before you need it, if possible, so that you have it there when you need it. It's not always possible to do this, and it's particularly hard in small businesses to do this, because generally a lot of money will come in and really it goes straight out again. But if you do this, it'll insulate yourself and your business from the sort of economic ups and downs that you have in businesses, and also really avoid you being at the whim of the banks and other lenders when you really need that cash. So, and it lets you take advantage of opportunities which may present themselves at a point you can't expect. So maybe one of your suppliers is suddenly selling a whole lot of inventory at a massive discount, and you want to take advantage of that. So having that cash reserve gives you a position of strength. It might mean paying yourself a little bit less initially, but in the long term, it's really the one way to put your business on a path to success. It means more money in your pocket down the line, because you're able to grow by using that sort of little reserve that you've got by taking those chances. So that's kind of just some 5 key ways of how you can sort of manage your cash flow. For me, one of the most critical, and obviously the one that is closest to my heart, is really making sure that you understand what your numbers are. So I'm going to delve a little bit deeper into that quickly. I'm going to talk about the two main reports you probably want to look at in your business. They're the balance sheet and the profit and loss. If you don't know what these are, you need to find out immediately what they are, because they are critical to your business. The profit and loss is pretty much a little bit looking backwards. What has your company done or business done? Where have you spent your money? Where has your income come from? And the balance sheet is a little bit more looking forward. Who do you need to pay? Who needs to pay you? You know, what inventory do you have on your stock, on your balance sheet that you need to sell? So your profit and loss shows all your income and expenses that you've spent, and your balance sheet shows all your assets and liabilities. Just to put that into lay terms, so assets are going to be things that you either own, so like things like cars or plant and equipment or inventory. Assets are also things like debtors, so sales that you've made but you haven't actually recovered the cash yet. Cash is obviously an asset as well. Assets are good things, they're things that you want. Liabilities are, not that they're not good things, but they're the more negative side of the balance sheet, in that you owe people all these liabilities. Liabilities are things like your the wages that you owe your staff, the super that you owe, your BAS, the GST that you owe, the ATO. So those are your liabilities. Loans that you've taken from whoever, banks, loans that you have given to the business should be appearing there, and the liabilities. So that's pretty much what it was. So what I want to do is just jump into some actual data, so I can just run through quickly what is in a P&L and what is in a balance sheet, so that you can try and understand that. So I'm going to jump into, I've got Xero, and I've got a couple of reports that this is a demo company, so there's no one's live data, it's just some dummy data. So I've got a profit and loss. So I just want to go through this profit and loss quickly and just outline what it is and what you need, the key things that you need to understand about it. At the moment, this is showing us 12 months, so it's showing us the full year, plus it's showing us the year before. So it's giving us an equivalent year before. And generally at the top of every profit and loss, there are your sales. That's generally the first line in almost all profit and loss. It's what is your income. This does not mean you've got $32,000 in the bank account, in your bank account. It means you've actually invoiced people for $32,000. Of course, it does depend though if this is a cash basis. So what's critical in looking at the profit and loss is what are the parameters that you have set. So I've said this is June for 12 months. There's some other options where you can show a cash basis. This will show you what is the actual cash that has come in from sales. And you'll see that immediately jumps down to 22,000. So 10,000, that means $10,000 of those sales, you actually haven't recovered those funds yet. So we've got sales. Cost of sales is the next section. And cost of sales are those costs that are directly related to you making that sale. So they're things like where you've had to buy stock. So you've had to, in order to make that sale, you've had to buy stock. You may be, if you may be in a service business and you've had employed someone to help you do the work, that person you will maybe bill out entirely to your client. That is entirely a cost of sale. It doesn't include things that you pay regardless of whether you make a sale or not. Those appear down at the bottom in your operating expenses. Those costs you pay regardless of if you make a sale or not, you still have to pay them. So wages and salaries is one of those, because generally with a salaried employee, you pay them regardless of whether you make a sale or not. You just have them as an employee. If you don't make a sale, you don't really, obviously you're in a much better position to pay them, but it's not, your sales are not reliant on that employee being there. Well, they may be, but you still have to pay them regardless of whether you make a sale or not. So in general, you'll have sales, cost of sales, and then you'll have your gross profit. This gross profit is your sales less your cost of sales. Ideally, you want this to be quite high, the profit percentage. So 27 over 32 is probably about 80%. That's probably about an 80% gross profit margin. This varies very much depending on what industry you're in. So if you're in an industry, if you're in like a retail industry, this may even be 100%. You know, it depends. Like if you're selling goods, you might mark up 100%. In a service industry, I mean, something like an accountant, I suppose for me, like I don't, unless I've obviously got people working for me who are doing the work, then obviously that's reducing my gross profit. And I don't really have to buy a lot of stock. I don't have any stock. It's all to do with service. So this is very much dependent. And you can sort of benchmark. You can look, you can search, you can Google what is a benchmark for my industry. And so you can sort of see, well, where are you in comparison to the rest of the industry? And you should be in line pretty much with what the industry is. So calculate what your gross profit percentage is. It's an important number to know. And then below here is all the operating expenses. So, advertising, consulting and accounting, entertainment. I don't really like things going into general, but sometimes you don't really necessarily want to track them separately. And then all the other things, motor vehicle, office. It's good to track things. You can make this as detailed as you like or as summarized as you like. There are a few critical things that need to be reported separately on a tax return. Things like motor vehicle expenses, things like repairs and maintenance, things like wages and salaries. But everything else does actually get lumped into one box on the tax return. So this is really more about you managing your business, not about what you need to report to the tax man. And so this doesn't really have comparatives, doesn't really have prior year information in there, but it's quite important because what you might want to do is you might actually want to look at this on a quarterly basis. So you might look at it, where you're showing a quarter by quarter basis. And so you want to compare quarter on quarter how you're performing. Where are you spending a lot of money? Which months you might find like, you might spend a lot of money in summer on something, or you might spend a lot of money on air conditioning in summer, depending on what your business is. So it's important to set this up the way so that you can see what you need to see, and to work with your accountant to do that. They can guide you, but it's important that you tell them, I want to be able to see this number. Like, for example, even using Stripe or Square to make sales, you probably should track maybe those fees separately, so you know how much you're spending on that to actually get your sales in. It's a good thing to understand. So that's your profit and loss. Your balance sheet pretty much has 3 sections to your balance sheet. You've got assets, generally at the top. Then you've got liabilities, the people you owe money. So the assets are things that you own and people that owe you. Liabilities are people that you owe money to. So this is a really important part of this. This is a really important section. It's people that you owe money to that you haven't yet paid, assuming your books are up to date. And then the bottom section is equity. So equity in a sole trader business will be things like your drawings that you've taken out. Generally is really the only thing that really appears in equity. In a company, you'll have your share capital. So whoever owns shares in the company will be shown in equity, and then it'll show you retained earnings. So sole trader business will also have retained earnings. Retained earnings are your earnings from prior years, or retained losses. So in this case, it's actually a loss. The negative equity is a loss. And then your current year earnings. This number, the 9348, should be the same as your year-to-date profit and loss. So that's your profit for the year, which in this case is a loss, and then added to your profit for the prior year, and that's really your retained earnings. Retained earnings are funds that are in your business that you haven't paid out. So you haven't paid out as a dividend, you haven't actually paid the cash out to you. Now, it may have been paid out though, because it may be sitting in the liability section. Now, the thing to understand about accounting reports, and especially the balance sheet, is for every debit, there's a credit. It's a balance sheet. It needs to balance. These two numbers at the bottom here need to be equal. 9764, 9764. Your net assets, and net assets are all your assets less all your liabilities. And so when this number is a negative, this is actually a net liability. It's not a net asset. It means that you owe more than what you either have in the bank or what's owed to you. So that's not a good thing. You don't want to be negative. It means that you either need to make more sales to catch up, or you need to try and reduce down those liabilities somehow, or increase your assets. So, and increasing your assets can be, so for example, if you get a loan, you'll be increasing your, so if you put a loan into the business, you'll be increasing your cash, but you'll also be increasing who you owe money. So actually the net effect is nothing on the balance sheet, because it's a negative, it's a debit and a credit. So just quickly running through assets. So we've got cash, which is obviously important. Current assets, really important that you keep a track on what's going on in these accounts receivable numbers. You want to make sure that you are keeping track of these. And a report that sort of is good to look at together with this accounts receivable report is your aged receivables. So this end of the last year, you should, and I'm expecting this to be about around about the 10,000 mark, because these are all the people that you've invoiced right towards the end of June, but they haven't paid you as at the end of June. The balance sheet is always as at a point in time. So this is as at the 30th of June. So it could be different today. So you need to be wary of what you're looking at. This might be old news. So this I would always look at as of today, assuming your books are up to date. But this is critical in you seeing, well, how old are these? You don't want anything in 3 months and older at all. You want everything to be current or maybe 1 month. And you can run these reports these days. You can put, if you've got all the details in your system, you can actually run a report which includes, putting the phone number here. So you can actually print this report out and just start phoning people and say, why haven't you paid me? So it's critical you look at this report together with your balance sheet. What makes up your accounts receivable? And your fixed assets. Now, fixed assets is going to be less and less common these days in small businesses, especially with the rather large instant asset write-off threshold we have currently in Australia. So $30,000. Anything under $30,000 that you buy, you don't have to capitalize. In the past, what you would have to do is capitalize it. So a car, you would capitalize, and then you would write it off over its useful life. So in other words, you only are taking that cost into your P&L as you're using it. So a car generally, the ATO standard is 8 years for a car. So you would write off that car. If your car costs $80,000, you would take $10,000 a year to your P&L as depreciation. This is less and less common, and very few, generally if I see something here in a small business, it's a mistake. We can just take this straight to the profit and loss. For me, the most critical in managing your cash flow is the liabilities. So you need to know, okay, first of all, who do you owe money to? It's important that you know who is on that list. And just put a total in here. Oh. So those are everyone you owe money to, and how long have you owed them the money. So this is a really important report. This, together with your age receivables, is important to look at and see who do you owe money. And one thing you can do is you can set something up so that you set up when do you want to pay those people. So that's important. GST, this is a really good number to keep an eye on, because really, ideally, what you want is you want to have money sitting in a savings account that is going to cover that GST. So ignore that historical adjustment for now. PAYG, withholdings payable. So that's if you have employees, or even if you pay yourself, it's critical you keep an eye on that PAYG due number, because it means the number, your BAS is made up of your GST and your PAYG withholding payables. So those two numbers together, 6 plus 1.6, so $7,600 is what you are going to owe the ATO in your June 19 BAS. So this is a really good place that once your books are up to date, so once you've reconciled all your bank transactions, you've put everything into Xero or into whatever accounting package you're using, it's a really important thing to look at your balance sheet and just see, well, where am I? Where am I in this process? At the moment, this is not ideal because I actually owe more than what I've actually either got in the bank and am waiting to come in. So that's the balance sheet, that's the P&L. And so that pretty much does cover off, there's probably two of these points. One is keeping your books accurate and up to date, and two, keeping your accounting simple and really knowing those numbers. So you want to be able to understand those books. If you don't understand something in your books, ask your accountant. If you don't, you need to understand everything, especially in your balance sheet, because those are things that you either owe people or owe to you. So it's critical that you ask your accountant if you don't know what they mean. Ask them to explain to you. Ask them to give you a balance sheet with notes, with comments. What does each number mean to you? I like to do that whenever I give my clients BASs. I like to send them a management report that actually explains to them, well, this is the number you owe ATO. This is the number in the bank. These are the people that you owe money to. And so, yeah. Did you want to say something, Sophie?
No.
No? Okay, cool.
I think my jewelry must have banged the table.
That's okay. So I guess where do we go from here? There's obviously a very quick overview of what your books mean. And so I think some key steps in what you can do next. Get some accounting software set up if you don't have any. I have a basic Excel spreadsheet, which is a good start for a really small business. Doesn't cost you anything. So I'm happy to share that with you. Get in touch if you want me to send it to you. I can do that. Find a good accountant to guide you. You need someone to help you. If this is not your strength, you need to find someone to help you do this. And keep your books up to date. The only way your software means anything is if it's up to date, because otherwise you're looking at old news the whole time. And finally, educate yourself to make sure that you understand the numbers. I've set up an online course that you're welcome to, jump into and go through. It covers everything from how to set up your business through to how to do basic bookkeeping, how to use your Seedbank, how to use Xero, how much do you pay yourself, with some end of year tips and tricks. So if you have any questions, don't hesitate to get in touch with me, either by email.
Absolutely. Wow. There's a lot of information that you need to know about numbers. That was awesome. Thank you, Geraldine. I remember, please do reach out to Geraldine too if you have any questions about any of this. If you have an accountant in your community, that's great. Reach out to them or the bookkeeper. And if you don't, Geraldine's here to help you as well. I think just for me, when I really took ownership over my numbers and got serious about it, helped me to be able to grow, because I knew the cash flow that I had. I knew where I could spend money on and where I couldn't. I knew how much I had to make sure was put away for GST and for payments and stuff like that. So it really does help. And it's not as scary as it seems. You just got to kind of get in.
And I think actually not knowing is worse than knowing, because at least if you're up to date and you know what the number is. I mean, a lot of people, even doing tax returns, even if people owe money, I say, let's do your tax return, get it done. You know what's due. You only have to lodge it next year. So just get your stuff up to date and know what your numbers are. And then you can deal with it. Otherwise, if you don't know what your numbers are to begin with, it could be a massive shock.
Yeah, absolutely. All right. Well, thank you so much, Geraldine. Amazing, great content. So ladies, it's up to you now. Take some of this information or all of it and start putting it into place in your business. Share with us in the inner circle after you watch this video. If you have any questions, that's what the group is for. We'll have some great questions and topics in your meetings for the month as well. And Geraldine and I will be coming on live in the inner circle during the month to answer any of your questions live, so you can bring them there as well. Geraldine, thank you so much. I really appreciate your time and all of your knowledge in helping us get really, really clear on our numbers so that we can grow our amazing businesses. See you soon.
Thanks, Sophie.